Gentleman yields back. The gentleman from Arkansas, Mr. Hill, who is also the chair of the Subcommittee on Digital Assets, Financial Technology, and Inclusion, is now recognized for 5 minutes.
I thank the chairman. I thank our panel for being with us today. We've heard directly from the SEC director-level officials over the course of the last few months, and we've certainly enjoyed having Chairman Gensler here to have his point of view on behalf of the commission. So it's great to have your expertise, and we thank you for being with us. You know, not only has the SEC lost in the court of public opinion, even on a bipartisan base here on Capitol Hill, but the agency is now getting trampled by the federal courts as well, especially as it relates to digital assets. In July 2023, a New York judge determined that Ripple Labs did not violate federal securities law by selling its XRP token on public exchanges. In fact, in that case, they were referred to as being arbitrary and capricious. Last August, the court rejected the SEC's reasoning for blocking Grayscale's Bitcoin trust from converting to an exchange-traded fund. And just in the last few days, a Utah judge imposed sanctions on the SEC for, quote, bad faith conduct and, open quote, gross abuse of power, close quote, that the commission had demonstrated in a case against Dropbox. And this is important because we haven't talked about this in a long time in this committee. And as a result of that gross abuse of power, the commission is required to pay the legal fees, which means that our constituent tax dollars are now being used to pay for the SEC's overreach and failure. So whether it's refusing to comply with the Administrative Procedures Act or not, or providing clear rules of the road for the digital asset ecosystem, it's clear that the SEC under Gary Gensler blatantly and repeatedly oversteps its statutory authority. Our citizens are also very concerned about privacy and very concerned about their private information. We've seen the Office of Personnel Management have records leak. We've seen the IRS see constituent records leak. We've seen the CFPB collect transaction data on consumers and seen it leak. We've seen FinCEN now collect millions of records for beneficial ownership. And finally, the SEC is proposing to collect every American's brokerage account statement, every trade, every day through their consolidated audit trail. They've tried to work on this for a decade, but they are now planning to roll that out as we speak. FINRA President Robert Cook testified here that even his 80-year-old mother's information will be stored in the CAT, despite absence of any likelihood that an investor like his mom would try to manipulate the stock market. So, Mr. Gulliver, let me start with you. Do you believe that the biggest cyber vulnerabilities are CAT? What do you think are the biggest risks to the consolidated audit trail from a cyber point of view?
I think it's completely unnecessary for the CAT to store Social Security numbers for all U.S. investors, and it would be there's a real risk there that it could be breached and this information would be exposed.
And we've asked both Robert Cook at FINRA and the SEC what their plan is to protect that PII, personal identity type information, and they've not really responded effectively with what that plan is. Do you consider that if they do store it, it's at risk for breach?
Yes.
Ms. Schlipp, as a former enforcement attorney at FINRA, can you explain why the SEC can still do its job effectively without collecting this personally identifiable information of investors through the audit trail?
Well, the SEC has been able to do it for years and has continued to be able to do so with the transaction data without the personally identifiable information that's already been collected in the CAT.
Right.
The way it previously worked is that the SEC, upon noticing some sort of pattern or suspicious activity, would create a request for the investor's information to the brokerage firm.
Right. This is something that we've done for years. We have market surveillance of our exchanges, and we have surveillance of the activities of every brokerage firm, and we can do a sweep exam and get this information. I really believe this is a huge expense that's unnecessary, which is why I support Congressman Barry Loudermilk's bill to protect that PII. Let me stick with you, Counselor. The cost estimate was originally $55 million to implement the consolidated audit trail. Most recent estimate, $250 million, and increasing at the rate of 30% per year. if the consolidated audit trail, who ultimately bears the expense of this item that you say is unnecessary?
The investors will.
I think the investors will. I think it's a bad idea. I'll yield back to the chair.